Jessica, let's start exactly there with Donald Trump and China. So this trade dispute continues. We saw the market starting the week with a slump yesterday. But you will tell me there was some optimism today over this dispute. Where did that come from?
Thanks, Evan. Yes, exactly. We've seen quite a wishy-washy market the last session or two. And after yesterday's concerns, I'd say, over the escalation between the U.S. and China in regards to the trade war and those big losses, we've seen a bit of a recovery in the markets. Investors seem a bit more optimistic. And that's really after U.S. President Donald Trump said he is still talking with China, signaling that maybe some sort of a deal could be on the table for the future. Trump had also tweeted earlier that when the time is right, we will make a deal with China. So right now, we're all sort of waiting for that big meeting between Trump and China's Xi Jinping at the G20 summit. And markets have recovered today. They've rebounded. The S&P 500 index up as much as 1.5%, led higher by those tech shares, by those industrial stocks. The NASDAQ and Dow Jones have also recovered.
But that optimism, I see, didn't really sink into retailers because of that ongoing dispute. Some popular names sliding into negative territory today, or has that changed?
Exactly. So we have seen the retail sector still very much concerned over this general escalation between the U.S. and China here. For example, Ralph Lauren, the biggest decliner today on the S&P 500 index, down as much as 8% at one point today over fears that this trade war is going to hit its products, especially its iconic polo shirts, its sweaters, its footwear, a number of products there. The CEO has also spoken out about these concerns. And in fact, even though Ralph Lauren does make many of its products in Italy, it still does have its Lauren and Polo brands being made in China. Now, we also had, interestingly enough, an analyst coming out from Cowen and saying that retailers could face about earnings per share declines of between 10 and 30% or even worse on these issues. So the retail sector continues to be concerned over this trade war.
And then finally, Jessica, the oil price, I mean, behaving like a volatile currency these days because we've seen it drop below 70, but then we had those attacks on a Saudi Arabia pipeline there, and I suppose that's behind this the surge once again.
Absolutely, Devin. Yes, Brent and WTI both rallied today after what I'd say is just these continued geopolitical risks that keep hitting the oil market here and supporting oil prices. We had Saudi Aramco halt its main cross-country oil pipeline after drones attacked it and damaged some of its pumping stations along that link. Now, this follows recent attacks on oil tankers off the coast of the UAE. So right now, there's plenty of supply risks to go around that is really supporting that Brent and WTI crude price. At the same time, this more risk-on sentiment in the equity market that we are seeing today is also helping crude give a little bit of a bounce there.
Jessica Summers in New York, thanks indeed for the latest on the U.S. markets.